Well, thanks everyone. It's a pleasure to be here. I haven't been here in a long, long time, so it's nice to see all the progress, and I was able to walk the campus for a few minutes, and it's a good feeling to be here. Do we want to take questions at the end, or should we just take questions as you have them? Let's just ask questions as you have them, and then we can do questions at the end as well. I'm going to talk about how an engineer thinks about business, and actually, more specifically, I'm going to talk about how this engineer thinks about business. So it may not be the footprint that you'll see with others, but it's sort of the story that makes sense in terms of my experience. I think one of the great things about engineering is that you really learn how to become a good problem solver. And I think the reason for that is that you're very fluid with facts and love numbers and data. And I think that's very important. I found in business, you really need facts instead of emotion or what people think. Because sometimes what they think is what they want to think. The facts tend to be a true reflection of reality. The other advantage an engineer has is the process focus. Thinking in sequences and thinking about process flow is very important. And in a little while, I'll talk about how we thought about process flow in one of our acquisitions. The other is engineers are very root cause oriented. And I think sometimes in business, people can be superficial thinking they've solved a problem, but because they haven't got at the root cause of the problem and asked the fundamental questions of what's driving it, sometimes the answers are incomplete or inaccurate. And another advantage of an engineering background is that root cause mentality. And the other is the attention to detail and the fact that most engineers are very focused on execution and delivering, and all these attributes make for a good business leader. This chart I'm going to refer to twice in the presentation, and just from the standpoint of how I see it and how I reflect on my own career, I think the foundation is, once you have a great education from a school like this, is continuing to develop your technical skills and not losing that basic building block. And then strengthening other things like teamwork. And I was thrilled to see what the freshmen do in their leadership training and the design training and interfacing in teams. And that's so important as you get into a larger organization, or frankly, any organization that has multiple functions, whether it be IT, accounting, marketing, sales, engineering, manufacturing, R&D. The next is to work on simplification. I had the privilege of working for probably the greatest business leader in the world in keeping things simple, and that was Jack Welch. He had an ability to take a very complex company, General Electric, and break it down into very simple key drivers and key levers. And I always marveled every time I presented to him how quick he could get what I was saying and take it to another level, but keep it simple. And I think one of the most important things is the simplicity that you can achieve in expressing yourself to others or in keeping things simple so that a large group of people can execute on strategy. And then for me, developing financial acumen was important. I don't have an MBA. I didn't go to business school. So having the ability to learn the science of a balance sheet and the language of accounting is very important. And developing financial acumen is something that's key. And even for an engineer that's staying in design or in R&D, understanding the financial implications of what your proposition is all about is absolutely critical. In fact, most R&D ventures fail because of the lack of understanding of the financial side. In terms of focus, when you're a little further along in your career, what I found is to continue to have a broad intellectual curiosity. You need to understand legal, you need to understand IT, you need to understand HR. You need to understand the whole array, what the entire business system brings to a customer base to be a successful leader. A lot of people will say to me, well, how important is networking in business to get ahead? And I don't think it's very important. This is just my opinion. I think what's important is exceeding expectations. If you are constantly delivering beyond what you're asked to do, that is the recognition that will allow you to get better opportunities year after year and promotion after promotion. And then the other thing is to think big. And I'll have some examples of that in a few minutes. But I think we all as engineers run into the potential of staying focused in one particular discipline. And that's great if that discipline is exactly what you want to do. But if you can think outside that, or even within it, to think in terms of stretching yourself, that will always serve you well. So let me talk a little bit about the venture that I started with 3 other partners 7 years ago. In fact, it's almost 7 years ago today. We started an infrastructure business, and what infrastructure is are critical facilities that serve communities. So there are things like power plants, seaports, airports, container terminals, pipelines, basic infrastructure that allows civilization communities to continue to prosper. The traditional model in the infrastructure world was very much a buy and hold. In other words, investors would buy the asset, hire a management team, hold it, and then sell it. Our premise when we started was to buy and improve. And the improve part is where I came in. I've built a team of engineers, and I'll describe what I've done and how many I have in a few minutes, that basically drive earnings growth, improvements in customer service, improvements in every aspect of the business that we buy. And we're quite intrusive. In fact, some CEOs of the businesses that we buy didn't like it because they wanted to run their own show and be autonomous. We spent a lot of time convincing them that there's value in letting us get involved, or if that didn't work, they left. But it was very apparent that they weren't used to an intrusive management style. And I'm a firm believer that the value we've added is because we are intrusive. Another aspect of the traditional model was to use financial engineering to drive returns and profitability for the investors. That's a tricky balance. When I talk about financial engineering, I'm talking about the amount of debt versus the amount of equity or personal money that you have invested. And a good example of how you can get in trouble by having too much debt is what happened to the global economy in 08 and 09. Most of our competitors collapsed because they had debt to equity ratios that were, in some instances, 90%. So in other words, if you had a $1 billion investment, you would have 900 million of debt and 100 million of equity. And what that means is you're paying a huge interest rate on that debt. So if there's a blip in the economy, you end up getting clobbered and you can't cover your debt service or your debt payments. And when you can't cover your debt payments, what do you think happens? The banks take over the business, just like a mortgage company would take over your home if you couldn't pay the mortgage on a monthly basis. What we did is we said we weren't going to do financial engineering, we were going to do process engineering. We were going to work on the processes in the business to provide great customer service, build market share, and be as efficient as was possible. So a very different model. We were going to buy and improve, and we were going to drive efficiencies. The perspective we had in the early days, 7 years ago, was could a lot of the tools that we use in industrial businesses help drive these efficiencies? In other words, we don't need to invent anything new. We can apply the practices that you learn here and in the industrial engineering department and other departments about process engineering and debottlenecking and thinking about cycle time and quality. So I'll show you some examples as we go further along. But let's step back and say, okay, if we're thinking about buying and improving, what are the characteristics, the competitive dynamics in the infrastructure business? And they're quite remarkable. And in fact, I'm sort of sorry I didn't discover them earlier in my career because I would have started this venture sooner. They have very high entry barriers. When I was in the chemical business at GE, I would lose a lot of sleep over who next was I going to be competing with. Was it from Korea? Was it from China? Was it from Japan? What was their cost structure? Why were they pricing so low? We had a constant battle of new entrants. So the barriers to entry were quite low. But when you think about infrastructure assets, they're quite high. I have not woken up once since we acquired the 3 airports thinking the Chinese were going to build a new airport and it was going to clobber us. Society allows so many airports, planning permits, use patterns, governments. So once you have one of these assets, it tends to be a mini monopoly, which obviously is a good competitive position to have. Because it's a mini monopoly, there's great pricing power. That's the ability to recover inflation plus. And my days in GE and almost every business I was in, we had no ability to recover inflation, and in fact, frequently we would lose as much as 5% price per year. So again, the dynamics here are very positive. We had very few low-cost country threats, in fact, almost none in infrastructure, where it was constant in typical industrial businesses. And there was limited technology change, which, as you know, in industry, technology is changing constantly. So that's the infrastructure side in terms of how good a foundation that infrastructure business is incorporated with in terms of its competitive dynamics. On the other side, because industry is very competitive, there's certain things you have to do to survive. One is to use best practices. We use a lot of lean, which is a manufacturing technique that Toyota made famous using events called Kaizen, which is a Japanese word for continuous improvement. Lean is what made Toyota so famous in the automotive industry. They found a way through process redesign to optimize the construction and assembly of cars. That technique, called lean manufacturing, is used in many industrial businesses. We deployed it, and I'll show you some examples of how it worked in our assets, and it's been very successful. The other technique we use to avoid deviation or span of service levels or span of performance is Six Sigma. It's the use of data with statistical analysis to find out what is the root cause, to redesign the process, to put in controls to prevent it from deviating again and operating at a higher level of standards. And I'll talk to you about that in a little more detail. And the notion of proactive leadership is the only way you can survive in tough competitive industries. So if we could marry the beauty of infrastructure assets with industrial best practices, our belief was we would get higher returns. Now, why do we think that would work back then? Well, we had a view that was largely based on success in industry. In this case, we picked a Toyota automotive plant in Georgetown, Kentucky, that took in 10 billion parts and produced 500,000 cars. Fairly complex manufacturing operation. And they operated at 5.4 sigma, which meant they had, on average, one defect per vehicle. On the other hand, we looked at Gatwick Airport, which we acquired in 2008, and it processes 32 million passengers, about 40 million bags, and produces about 250,000 flights per year. And 30% of the time they had a defect. They were operating at about 2 sigma. And we had to ask ourselves, did God do this? Or is this a function of management and what management does to lead the organization, what we measure, what we control, what we hold people accountable for? So we felt clearly, in the case of Gatwick, we could make a 2 sigma operation substantially better. So we started building a team. Initially, I was it. And then I hired a fellow by the name of Scott Stanley, who worked for me at GE and has a great manufacturing background. And our first asset was London City Airport. It's located on the east side of London, close to where the Olympic Games were. And it's a small airport. It does 3 million passengers a year, and was a great laboratory for us to test our premise of, would these industrial tools really make a difference? And we focused on customer service, efficiency, driving growth through better commercial operations, better marketing, and cash management, which is critical in any business.
So Bill, you said we look at London City Airport as trip. How much you have to have that kind of entity?
London City Airport was a $500 million investment. This is part of thinking big. We decided there was a competitive advantage if we went for larger assets, because there's fewer people that can afford to make that kind of investment. And without sounding boastful, this is a bit of a remarkable story, because in 7 years we've become the largest infrastructure investment firm in the world, principally because of our desire for scale and to think big. So Julio makes a good point. The other point I should make is it doesn't always work. Big, when it fails, is very painful, and we've had one failure. We bought a company called Biffa, a solid waste business in the UK, and when the recession hit the UK for an industrial commercial construction waste-oriented business. It wasn't a municipal waste. We lost 30% of our volume within 2 months of the start of the recession. Now, in a waste business, the volume is critical because once you collect that waste, you then start making money after that by recycling, energy conversion, landfill. So what happened to us is we lost 30% of our volume on collection. So that meant we were collecting 30% less revenue. But that compounded itself because we had 30% less feedstock going into our recycling business, our energy recovery business, and then ultimately into a landfill business. So it was really a double whammy. In addition, what do you think happens when volume goes down 30% in an industry to price? Price goes down because all of a sudden there's excess capacity. So we also lost price. So we ended up, even though we had modest debt levels in that business, we ended up having to give it back to the debt providers, and the banks took over the business. So we had to write off a $550 million investment. So it doesn't all go perfectly, and you need the mental fortitude and stamina and the self-confidence to say you can overcome that and continue to carry on. And our investors said something very interesting. They said to me several times, as they were thinking about investing in our second fund, having witnessed the loss in the first fund of $550 million, they said, we actually think you've learned from it and you're a better firm and you're going to be more careful as you pursue new investments in the second fund. So they were acknowledging the fact that you learn from your mistakes. You don't give up. You don't walk away with your head in the sand. You find a way to make it better and take that experience and make it a positive experience. And I think that's true for all of us, whether you're in school, a professor, or in business like me. Did I see it? Yes.
How can you make money putting garbage in a landfill? I thought that'd be something that would always cost money. How's that work?
Because there's a landfill tipping fee that you charge for people. It was $80 a ton at the time we left the business. And before that, when we first got it, it was $120. So you charge the truck when it pulls in for the tipping. So you end up making money in each stage. That's how that works. The other thing, we built the largest anaerobic digestion process factory in the world and started it up on time and on schedule. And even with some of the great heroics we did, and this is an example of why you can't despair, we were still able to execute on all these things, but we couldn't make a go of it. And you move on. You just sort of learn from it and move on.
Where do you get your money? Do people invest in your company, or do you take loans?
It's primarily from pension funds around the United States and in Europe. And we also have some sovereign wealth funds that have invested in our fund. CIC, the China Investment Corporation, and several of the big Australian pension funds have invested in us. Australians in particular like infrastructure assets because they live in a world of mining and resources. They're used to big infrastructure projects and they're comfortable with that investment profile. So some of the investors are CalPERS, the California pension system, state of Washington pension system. So these are big investors. The minimum investment is $25 million. So if any of you are interested after the presentation, we can talk about it. Again, it's scale. We're dealing with large pension funds that have billions of dollars, and for them to allocate $200 million or $500 million to us is a portfolio decision for them to make. So we built this business with more and more engineering talent as we grew it. And I had originally thought I could use 12 people based on the London City model and scaling that, but we entered into more complex businesses. We started doing pipelines. We started buying assets from strategic companies that we then had to separate from the parent company, and that meant we had to have separate HR systems, separate IT systems, new treasury functions, separate accounting. So we started to build more expertise for those kinds of separations that required more manpower. And as I said earlier, the focus was on customer service. And when you provide great customer service, it gives you more pricing latitude. And one of the things about a sales force is they will agree mentally and emotionally to a price increase when they're comfortable as an organization, you're providing a better service. So the single best way to get your sales force to believe in a price increase is to provide better value for your customer base, better service. We spend a lot of time on efficiency, growth, and cash, and we'll talk about these. So I'm now going to walk through how an engineer thinks about an airport, well, how this engineer thought about an airport. And when you think about an airport, you're moving people, bags, and planes through a process. So here's the process in its basic form. Check-in is what you first do when you arrive. You go through security. You then go through the terminal. The bags end up getting into the departure or arrival area, and that's the sequence of events. At Gatwick, we have about 2,000 employees, and the airlines, through their own employees and contractors that they bring in, have about 9,000. So we have a total population at Gatwick of about 11,000 employees that we had to influence. So it's a little bigger than this university, right? So what I learned at GE, and I think what any leader learns over time, is you can do so much better if you engage a huge population. And again, this is thinking big. Most private equity funds, and certainly most infrastructure funds, would just deal with senior management. And they would spend time at the board trying to drive change in behavior of the senior management. Well, if you look at 50 people in senior management at Gatwick that were our employees and 100 in the airlines, and figure out the annual hours that they represent, it's 300,000. So it's a little dent if you're going to change the culture and change their philosophy on serving customers and pleasing customers and making the airport experience positive. By the way, the US could use some help here in terms of making the airport experience positive. Then you go down a level to the next level of supervision, and you have 300 people rather than 50, and 1,500 airline people. So if you can influence them, you get 3 million man-hours moving in the same direction. And then if you look at the core operating people, we have 2,000, airlines have 9,000, that's 21 million man-hours. So if you can influence the hourly person in his or her approach to the work product, you start to move the organization faster, more powerfully, and more effectively. At McKinsey, we used to call it, if you could get people generally heading west, you're so much better off when there's chaos. So we spent a lot of time giving tools to the lower level organization with performance metrics, a culture of continuous improvement. In other words, once we hit a goal, we're not done. We now have a new goal. And cycle time became something they all started to think about. It's not complex. And we started to give the hourly people a sense of how important cycle time is. Then for the supervision, we taught them to design for Six Sigma, lean, and process redesign. And then for the senior management, we had process executives that we put in place. In other words, people that thought about process. We stretched them with some goals to achieve improvements not only in customer service, but in financial performance. And we put in task trackers. These are basically accountability tools used to hold people accountable for achieving a certain task by a certain date for a certain cost. And we measured them relentlessly. We had a 2-week task tracker review on every asset based on a 100-day plan that morphed to a multi-year plan. So everyone knew what they were to do and when, and we would track it. A lot of discipline. So let's talk about check-in. We moved check-in from a concept of one person being checked in for one person working for the airline. The new approach was we would have 4 transactions for one. And what we're able to do is move the cycle time from 120 seconds to 100, and the goal is to get to 60. And the cue is to go to 100% less than 5 minutes. So that was a big stretch for the organization, but they could all see why it was important, because the customer obviously is in a much better mood and is more likely to feel comfortable to spend some money in your lounge, in your food and beverage offering, in your retail offering. So to the extent we can get people through the first phase faster, they have more time to spend money in retail, food and beverage. And they're happier. And you know when you're happier, you spend more money than when you're sad. Security. We use lean and automation to improve the security product, and I'll show you the results. When we first bought the airport in 2008, 2009 data, we were doing 160 passengers an hour, and 70% of the time we had queues less than 5 minutes. And we used 14 people in a security unit. Our goal was to do 250. We're actually at 250 today with 9 people. So that's a 50% productivity improvement. We now have a stretch goal. We think we can do 350 people. Now, can any of you guess what the single most important factor is in getting security throughput higher? It's so simple and elegant that it's almost obvious. It's the size of the tray. When you think about airports in the United States, the tray is so small you can fit your shoes and maybe a cosmetic bag. We put trays about the size of this table. What it does is it greatly enhances the throughput and it allows people to have 1 or 2 trays rather than 5. Especially important in winter time where you have a sports coat, a winter coat, and maybe a hat or gloves or whatever else. The size of the tray. Now when you think about the US airports and TSA, do you get a sense that there are engineers collecting data, looking at dwell times and thinking about lean techniques and debottlenecking the process and making sure the customer has a great experience? None of that is happening. That's what we do at Gatwick. We spend a lot of time. So right now, 99% of that time, the security queue is 5 minutes or less. Now that does 2 good things. One is it gets you through fast so you're happier and you have a more pleasant experience. The other is you can rely on that. You don't have to get to the airport extra early because the last time you were there it took an hour and 2 times before that it took 10 minutes. As soon as you have that experience of an hour or whatever long time it is, that's your planning horizon for when I need to get to the airport. So you create a different dynamic when people can rely on the fact you're there and through in 5 or 6 minutes. The baggage factory. In 2009, we had a factory that was in the basement of a building. You can see from the look here, it was intense, very low ceilings. And in fact, a couple of these guys would get cornered against a piece of machinery that would grab their shirt or jacket, and we'd have to extract them. That's how dense it was. It was like the Dark Ages. And we worked on trying to think of a better way to do this using Design for Six Sigma. And the key in Design for Six Sigma is asking a lot of questions, going through the rigor, probably similar to what you do in the design classes that you teach here, to get multiple input and think about what is optimal, what is the real problem you're trying to solve, and how can you solve it effectively. So the plan when we bought the airport from the prior management was to spend 180 million sterling and to renovate that existing low ceiling in the basement facility. And through several iterations of Design for Six Sigma, we came up with, let's build a new baggage factory and integrate within that factory on its perimeter a new terminal, we call it a pier, to service gates and aircraft that come and park and load and discharge. Now, what's so cool about that? Well, think about how hard it is to debug and replace parts and equipment in that dungeon-like old facility, this facility, and doing it on the fly. Because in an airport, you can't shut down and say for folks, we're taking a year off, come back in a year and you can use the airport. You got to do it in off hours, which means late at night, and you have to do it on the fly. It's a bit like changing the oil in a car while you're still driving. So what we came up with was this brand new concept. It's 30 million pounds cheaper, and we can get far faster results, and we don't take the risk of changing the oil while you're driving the car. We can build this thing purpose-built, state-of-the-art, keep the other facility going, and very importantly, we can start it up on a trial basis, see how it works, and avoid the syndrome at Denver Airport or Terminal 5 at Heathrow, where they shut the old system down, went to the new, and the new wasn't ready for it. And what happened? For 5 days, people couldn't use the airport because they couldn't get their luggage. Silly. Common sense. And Design for Six Sigma addresses that. So we thought we had a far better solution, and we do. On departures and arrival, we spent a lot of time using Lean on the cycle time improvements for turning around an aircraft. On average, we were 44 minutes. We moved it to 30 minutes. No one ever even measured it. They were at 44 because that's just how it happened. As soon as we put a clock on people and started to measure their performance, collect the data, tell them when they were in line or out of line, we moved to 30 minutes. That has a big impact on the ability for the airline to get better utilization. It also has a big impact for us to get more capacity output for the same asset. And then one of the things we did is we challenged the team to improve peak movements. Everything in an airport has to do with peak movements. Off-peak is always easy. Gatwick is the busiest single runway in the world at 50 movements per hour. Germans would come and study how we did it. We were that good. And our view was, I think we can get to 55. So again, thinking big, stretching. So we said, let's have a Drive to 55 program where we assigned some black belts and a chemical engineer from Cornell, sorry, he didn't come here, to work on, probably the most brilliant guy I have on my team, to work on cycle time improvements using lean and some design for Six Sigma criteria. And we were able to get to 53 today. We think we can get to 58 instead of the 55 that we had stretched them to. Well, what does that mean? Well, if we get to 55, it means we can add 9 new slots this summer. Each slot is worth $1 million in earnings, $1 million sterling in earnings. So that's $9 million. 2 people worked on the project. And we think when we get to 55, which should be a year and a half from now, we'll have $30 million of incremental earnings. And also avoiding capital expenditures. In other words, we'll get 30 more slots through the peak periods without having to add any CapEx. So this is what an engineer can bring to make a business better without having to go to government to ask for money or some other entity for bailout.
Can I ask a question about that? Can you give us some specifics about how you increase the throughput on one?
On the more slots?
Yeah.
Yeah. Several things. One is going back to turning around aircraft. Very important, because if you can turn around the aircraft more quickly, you then are in a position to tell the pilots when to start their engines and when to leave. Normally what happens is the engines are running while people are fooling around, and you have all this variability in the turnaround time. And the pilot pulls out when he wants to. Well, that's chaos. You want to orchestrate the pilot pulling out, because you want the tarmac and the first phase of movement on the apron to be controlled and not have congestion. Because as soon as you have congestion, it backs things up. Then on the runway, you have to be very precise in when you enter and when you exit, and the sequencing becomes very important. We found the optimal is arrival, departure, departure, arrival. And that was a better sequence from taxiing standpoint than going arrival, departure, arrival, departure. Then below 4,000 feet, the air traffic control at the airport controls the airspace. And we came up with new algorithms that would allow us to depart in different directions rather than always the same. And then the last thing is we worked with British air traffic control above 4,000 feet elevation on allowing more slots for circling away from the airport so we could sequence in a timely fashion. So a lot of it was just process optimization by those 4 factors that allowed us to squeeze more juice out of the lemon. It wasn't sophisticated. In fact, we didn't even use calculus. It was basic. So I'll go back to teamwork. As we started to do these things, the organization started to see the value. And very quickly, we got everybody engaged. Now, I must say the airlines were slow. The airline that picked up the quickest was Norwegian. The CEO and the senior people at Norwegian loved what we did at check-in, the aircraft turnaround time, the use of lean. We sent people to Norwegian, and they came and visited us, and they really took off with it. And it had a big impact, because the biggest user of our airport is EasyJet, and they gave us the stiff arm. We don't really want to do these things. You're intruding on our business. We'd rather do it the way we're used to doing it. When EasyJet saw the success at Norwegian and the fact that they were getting so much more efficient, they joined on, and then others followed. So a bit of competitive juices were flowing to get the other airlines to support this effort. So we're off to a great start after 3 years of ownership, and I'll give you a sense of what we've done. In a business that is generally driven by GDP, which has been negative in the UK over this time period, we've grown 9%. And we think the 225 can become 325 in the next few years. So again, stretching, thinking big, trying to drive for continuous improvement, bring new thinking to the job is really what we're doing. And by being proactive as owners of these assets, and with my team there helping, sometimes coaching, sometimes leading, sometimes cheerleading, depending on what project we're on and what phase, we've been able to drive these kinds of improvements. So in summary, what does this mean? Well, if you think about the skills an engineer has and couple that with thinking big and stretching, exceeding expectations, which is largely done because you've stretched yourself in the organization, being broad thinking in how we involve all the constituents, the airline employees, the hourly employees, the security people who are actually processing bags as they go through the metal detector, and being intellectually curious, thinking about the full system and how the process can be enhanced from soup to nuts by every individual, whether it's an IT person, an engineer on the design of the new security system, or just an hourly employee who's working the conveyor belt. And my suggestion to you is this little triangle is something to think about as young engineers think about their career and how things can progress. So I'll open this up to questions.